Oh, thank you so much for tuning in today. I'm Marlon Bowling, your tour guide to the ag commodities. Well, I hope you had a good Independence Day yesterday. Most folks, a lot of folks, got the day off. I know a lot of folks had to work anyway, so we totally understand that and appreciate everything you do anyway. Let's take a look at what the markets are doing from the ag commodity perspective, and our quotes are provided by Bar Chart. So let's go to the corn, and you know, corn started out higher this morning, then it kind of faded away a little bit. Let's see what we're doing now. We're fading even more. September now down 5.5 at 482.5. Wow, we're now 16 cents off of our early morning high. I would say overnight high, but we didn't have any trade last night. December corn now 4 3/4 lower at 488 3/4 after a high this morning of 504. So they're heading south on us on the corn market. Now on soybeans, we had some very strong gains in the beginning, and they are kind of fading too. August soybeans still higher. They're higher by 15 cents at 1482 3/4. But we had been as high as 1493 3/4 earlier this morning. We've given back about a dime. November now 12 higher at 1365 3/4, kind of the same deal there. Now in September, Chicago wheat, we are 19 1/4 higher at 661. And in this case, we opened lower this morning. We had gotten as low as 646 1/4, and now we're up within about 9 cents of our high of the day. So interesting market here, a wide trading range in the wheat. Look at the high, 669, and the low, 646. So that's about a 23-cent trading range right there. And that's just this morning. On the hard red wheat in Kansas City, September now 36 3/4 higher at 833 1/4. That's off of its earlier low by 32 cents. And in Minneapolis, you have that September wheat contract there now 33.5 higher. We're at 842 3/4. And in the cotton market today, well, it's having a hard time keeping up. December down 55 points at 80.86 per pound. We have Todd Bubba Horowitz with us, and he is with BubbaTrading.com. He's speaking to us today from Las Vegas, I believe. Hey, Todd, good to have you with us here today. I hope you had a good day off yesterday, if you had a day off. Talk to me about the market action you're seeing so far today and what it may mean.
Marlon, good morning and happy Independence Day. I don't like it at all. I think corn is coming down. If it breaks 480, it's already a disaster. I think it becomes a much bigger disaster. 480 is kind of the key hold here. So wheat's starting to give it up a little bit here. As you were talking, it's now only up 16 cents after being up 20. And soybeans are getting ready to, it looks like they're going to turn red here. You know, they're up to 8 cents, but they were up 20. So the action is not good. I think it's more of a sign of the economy, but the only thing I can rest on is the lack of volume and the lack of participation. And I think you're seeing just the funds, once again, starting to pound away, trying to sell them and short them. And I think the only thing that's going to save this market in the near term is if we get some kind of short squeeze, some news that forces everybody to cover, and they can break back into successful levels, because these levels are really weak where they are, and technically there's a lot of damage being done.
Okay, are you doing anything with the clients that you work with as far as looking out to 2024 now for marketing on corn or soybeans, or for that matter, even wheat?
Yeah, we keep everybody hedged all the time. As long as they got a crop on the ground, we're going to keep them hedged, because again, obviously at this point we're so close to input costs that we better make sure that we have that protected if we're going to want to be able to plant and make a profit again next year. So yeah, we're always keeping on top of all of that stuff, because it's important to let the upside run when it comes, but make sure by all means you're protected to the downside.
So I got a question for you. Have option premiums, have they now increased with the volatility lately, or how are they priced right now? Do you think they are affordable yet?
They're pretty mid-range. I mean, again, if you understand the right type of position to put on, the volatility is not really a problem. And volatility is light pretty much everywhere, Marlon. What you're seeing, it's basically a very dull market if you put all the markets together, and there's not a lot of activity, which is keeping the volatility lower than normal.
One thing I noticed this morning was the crude oil trade, and on the West Texas crude, We had a big rally in the early morning hours here, and we're still showing August is up $1.56 at $71.35 per barrel. Got as high as $72, but it's off of that just a little bit right now. But just wanted to point that out for those of you that are energy watchers out there. Pretty strong performance being turned in on the West Texas crude. I need to take a break here, Todd, and we'll be back in just a moment, and we'll talk about this livestock trade as well. We'll be right back. All right, well, I'm going to go ahead and switch over here to the livestock trade, and we'll take a look at what the futures are doing. And let's take a look here at the live cattle board here first. All right, so we have live cattle opening up, and we're still trading a little bit lower today. I'm going to call it a moderate loss on the nearby contracts. You have the August contract now at 176.12, and that is down 70 cents on the day. We have October down 55 cents at 178.77. Now, I'll point out that nearby August contract right now, as it stands, we're off of our earlier high here by about, 80 cents, and we're only one tick from our low of the day. So things are kind of fading away here in this live cattle market. The nearby contracts are showing much more weakness than the deferred contracts are. For example, you go out to April, it's only down 2 cents, where the August is down 70. So watch out. That can be kind of a bearish signal for technicians. If you look at the feeder cattle trade today, we are now lower across the board. This market has been chopping around, flipping back and forth, higher and lower and higher and lower. Right now, August is down 22 cents. So that would put us at 247.67. And a little bit ago, we had a high of 248.85. So we're already off of that by about $1.20 right now. This is showing quite a bit of volatility too. September now down 37 at 251 even after a high of 252.07. So we were commenting about that before the open. Keep your hard hat ready today. You may need it. Now on the lean hog trade, they are decidedly higher, at least on the nearbys. You have August up $1.95 at 96.27. But there again, it's only on the nearbys. You go further out there, December's only 40 higher, Tammy, and February is now actually down a nickel. It's at 80.32 as we speak right now. So kind of a mixed affair. Everything is just kind of coming down a little bit as we get deeper into the session. We'll keep an eye on it for you.